Pat, many thanks indeed for joining us today for Tech the New Era, from all the way from Michigan, the wonders of Zoom, eh?
Yeah, it's good to be with you.
Isn't it incredible? You're in the broadly, and I know you don't like it described as this, but you're broadly in the property tech space. So your solution, takes advantage of some of the opportunities that arise from using blockchain technology to provide a property solution. But I'm just being devil's advocate here. But would you say that this is probably the worst time to get into the property tech space, given what is likely to be the impact on property values in terms of COVID-19?
So we would suggest that it's literally the best time, and the reason is the existing models for property values are in flux because human behavior is in flux, and those models are not going to be set for 3 to 4 years after the pandemic, and those models get kind of solidified and then universally agreed upon and adopted. And in the interim, anybody with an existing portfolio of real estate is going to want real-time data on how their assets are performing, because the largest of those property holders are going to have a position that they are going to come to 2 years in, 18 months in, et cetera, where they are trimming their portfolio or structuring their portfolio that conforms with their thesis. And to do that, they need real-time data on everything from rents paid, key fob data, how the building is being maintained, so that their investment thesis can be realized coming into the new models being adopted globally. So what do you need for that? You need real-time data that can be trusted under the underlying assets, and that's what we provide. And it is the ability to provide price discovery in moments of market turmoil. It comes at a premium.
Yeah, and the current model, the current paradigm for valuing property compared to the model that you have built, they're two very different things, aren't they? The fact is, it's very much like that approach, thumb in the air kind of approach to property valuation currently. So is this a very fundamental change in the means of valuing assets or illiquid assets that a lot of people have difficulty getting their heads around?
They do. There's a lot of people who have made enormous fortunes taking advantage of the asymmetry of data that's out there. And as they understand markets better than the retail market or broadly the institutional market, they have been able to amass a fortune. What we're doing is suggesting that this data feed that's going to come real time, that people can trust on underlying assets, is going to cause capital to flow to more assets more efficiently. There's going to be a significant compression of this illiquidity premium we see on privately owned assets. You're going to be able to manage real estate far more tactically. Right now, it's a strategic purchase that you own that you might get out of 7, 10, 15 years from now. And what we're going to do is give the data so that these things can trade much more efficiently, because the data can be trusted. Because when you're having a discussion back and forth, you want to have a discussion on one thing only, which is the bid and the ask. What is the price? But when you have questions about performance and what the asset is, et cetera, Inveniam's the mechanism to stipulate all of the performance data so that you can have real bid-ask conversations. In real estate right now, it's a 120-day conversation. We can move that into a 1 week, 1 day conversation.
How do you actually do it, though? Can you explain to those who are watching? I know that the underlying trust is provided by a blockchain layer, so it is an immutable register of the state of the building and all of the maintenance and leasing agreements and all of that goes on. But how do you get the feeds of information into it? And is that not an enormously complex task?
It is. I mean, we're 4.5 years into this. We've built this. We're now pricing buildings on a monthly basis. And what we do is we have this technology, which is an automated workflow, right? So think of it, the technical name for it is what's called RPA, or robotic process automation, where we on a repeated basis hit an endpoint, which is a machine or a human seeking data inputs, right? So we get those data inputs, and that's an endpoint which might be their computerized maintenance and management system, or how they manage their mechanical system, their electrical systems, all of that. It can hit their building information management system like Yardi, or a property management system, where we're grabbing that data. And what we do is none of the data itself leaves the client's site, meaning it's in their database. We are the anti-database, right? We are built to facilitate a distributed global economy. But what we do is we audit that data. We put the result of that audit on chain with a pointer back to the data, so that when you want to share that data, people can trust it. And so what we're doing is using this robotic process automation. We go into their systems, we get the data, we notarize it, digitally certify it. We index it so it's searchable. We make sure it's high functioning, and that if they alter it at all, you can tell immediately. And then we create a mechanism either where we validate it, or it opens the door for somebody else to validate it. And then what happens is it's just like an audit by Deloitte or KPMG or PwC. That's not a replacement for the data in the client systems, but it's a way to validate that the data in their systems is accurate. Mm-hmm. So what we're putting on chain is the audit result, not necessarily the core data. And they choose to use our system to share that data with third parties, where people can begin to trust the data in their systems on the performance of the asset. Does that make sense?
Absolutely. We just interviewed Daniel Lacalle. He's a very well-known economist based in Spain, but does a lot of work across the globe, in fact. And one of the points he was making about the impact of the current pandemic and the fact that we have many economies that are incurring huge amounts of sovereign debt, for example, and we've had a zero interest rate policy effectively, and in some economies a negative interest rate policy in play. And one of the points he made was that we're going to see, as far as a tech category, we're going to see the emergence of more and more blockchain underpinned technology solutions, because it's all about value creation. It's all about saying definitively and with immutability what the value of an asset is, or what indeed the value of a currency is, even in terms of cryptocurrencies. Do you sense that you're kind of part of a wave of interest in blockchain, that that you are part of the next wave that actually is all about focused on value creation?
So the answer to that is absolutely, but I'm going to caveat that with there's a counter wave that we're also experiencing, right? So the wave to use blockchain, and what the function of is blockchain as a ledger technology, right? It's a triple ledger entry system, right? A distributed ledger entry system that you can have a variety of different mechanisms, whether it's a proof of work, fully distributed system like Bitcoin, or proof of stake, where you have certain people who buy in through either reputation or capital to be a node, or you have these private nodes. But all of those are mechanisms to commute trust, right? That's all it is. It's a mechanism to commute trust. And a lot of people have been building on the blockchain, not utilizing that functionality, but thinking that it is a panacea, right? And the real killer app, we believe price discovery is the killer app of blockchain, that it's going to cause corporations to take it over, take this on. And we're talking with the largest of the large insurance companies, property management companies, where they say, yes, I need this ability to commute that trust. in order to get better accounting treatment, moving an asset from what's called level 3 to level 2. And to get that, Deloitte is our accounting partner on this, helping validate that all the inputs are what are called level 2, and then anchoring that into the payload of a block. And we do that for some who are allergic to blockchain because they're saying, oh, that's scary, I don't want it. We say, okay, listen, we're going to create a single node meta chain on your own database that you're writing into. We call that it's a blockchain on training wheels, right? And then what they're doing is think of back in 1999 when companies were worried about being Y2K compliant. We're making them blockchain compliant, so they're writing into the payload of a block so that when they get comfortable, either with enterprise or fully distributed systems, they can go to that. But we also can write to an enterprise system, whether it's Fabric or Corda, or we can write to a public chain. But what we're doing is we're using our software as a mechanism to gather the data, structure it, and then place it into the payload of a block so that the trust can be commuted to the right type of parties. So for retail, that's a distributed ledger on the public chain. For enterprise, there's an enterprise solutions, or some of these big corporations that want this, it's literally getting them on training wheels as a single node meta chain. Does that make sense?
Yeah, absolutely. And what you said earlier about the fact that you were essentially providing robotic process automation is critical here, isn't it? Because in effect, blockchain is becoming a critical business process engine, regardless of the chain that you're using, regardless of whether it's Corda or whatever. So I think the first wave is very much about, tokenization and crypto. The next wave is about saying, no, we need to disrupt existing business processes because they aren't actually fit for purpose. And I think your solution fits very neatly in that category of a disruptive technology that results in value. And the value is data which is proven and data which is immutable. And I think it's a very interesting use case for the underlying blockchain technology.
Yeah, can you trust the data on the performance of this asset? And so any data-rich, low-frequency trading asset. And so we're starting really in two areas, primarily, and then the third area that we're slowly going into, but real estate, private equity, where you're valuing a private company's equity, doing repeated 409A valuations, doing this repeated appraisal. So on the 409A, Deloitte's our partner in the appraisal for real estate. Cushman & Wakefield's our partner. Now we are an open architecture. We can use anybody, but right now we're fully integrated into those guys. And we have some other really great partners that are delivering this. And then also on bonds that do not trade often, but need marks on people's book, right? And what we're doing is, can you trust this data that it hasn't been altered? That's exactly what the distributed ledger is good for, right? And so if there ever is a time where people want to test the mark, what you can do is you can anchor that data into the distributed ledger. And for people who are holding meaningful positions in bonds that trade infrequently, in the US municipal bonds, middle of the curve, high yield bonds, that people then are going to test those literally in times of crisis, the need to go back and prove a provenance of the marks. So you can say, listen, this dislocation in the market that happened in March, April, May is not that my asset had no value, it's that the market was dislocated, right? Yeah. That there were sellers were selling at a bad moment.
What, and this is a more 10,000 foot view question. What's your feeling in terms of corporate property valuation going forward? Are we going to return to, the buildings that you're going to be valuing? Are they going to return to office use? Are they going to be? Is there going to be a wave of change of use? Is there ever going to be a working pattern like it was before this all happened? What's your outlook in terms of the nature of corporate property assets?
So I'm going to caveat that I am parroting people that we're working for and with who are much smarter on this topic than I am, right? So we're dealing with some of the designers and architects and managers of the largest property portfolios in the world, and there's an unequivocal consensus that it is not returning to the same old, same old. It will be new, right? I mean, just in England, Barclays CEO giving a comment a week ago about what they're going to do with Canary Wharf, in contrast to what he said 12 weeks ago about we're never going to put, you know, his comment, we can't run a 60,000 person business from our kitchen tables, right? We need to actually get people in. And the reality back into the offices. The reality is, I think the uptick is going to be in the secondary MSAs or cities, secondary municipal security statistical areas, that we're going to see corporations, instead of the office worker commuting to the office, we're going to see the office commuting to where the workers are. And we're going to see offices and office parks being developed with more square footage, not trying to jam as many people as we can in. And we're going to see them more in the outskirts of, in the U.S., in the cities surrounding the big cities. So we're going to see more sprawl. And the secondary cities, the Minneapolises, the Des Moines, the Spokanes, that are not what you typically think of as the big urban centers, are going to benefit as long as they have those core attributes of transportation hubs, education systems, and university and research. And with those things, we're seeing discussions of those companies moving to those areas. So, but again, we are somebody who sees those trends in serving our clients, not in making those decisions ourselves. Does that make sense?
Yeah, and to some extent, the value that is bestowed on an asset, a building or an office block or whatever, you kind of don't care. You know, it's about the valuation and the market valuation. It's not necessarily about property per se, and therefore, you could take the view that a kind of more hub and spoke kind of solution for to employ people in locations where property values haven't gone through the roof, and they might actually have a better quality of life and work is potentially a move in the right direction.
Again, we are data integrity and price discovery, and people were constrained to a limited number of cities in order to get comparables to deploy capital in size. With the better data, they're going to be able to go into markets that they haven't, these global allocators of capital, instead of buying a 2 cap in New York City, are going to be able to, and the reason they did that is they knew that would hold value. With better data, they know that they can get in and out of real estate, they can park capital, and get much better returns going into these secondary markets. And I think this is true in the US. I think this is true in Western Europe. And what we're going to see is these global allocators of capital expanding out into other areas, and whether it's a hub and spoke, whether it's a relocation. But what we are going to see is better data is going to enable a broadening of the market. And there's 2 reasons. Number one, in the best markets, there's going to be an illiquidity premium compression again. And then secondarily, that's going to cause people to seek those returns going to other places, right? And when there is, I was talking to one of the largest property owners in Canada, one of the big pension funds, with some panic selling that was happening in Kansas City. They literally looked at 2 comparable buildings last month. One was in a suburb of Kansas City, one was in Lagos, Nigeria. And they said, we'll take Kansas City all day, right? As far as, and is it going to ever return to where it was? Who knows? But man, they like those cap rates. And what you're going to see is, as the better data drives illiquidity compression, people are going to seek return, and they're going to seek that in these secondary markets.
Now, where do you go from here as Inveniam Capital? Do you could go in a couple of different directions. You could take your underlying technology and data layers and so on and say, right, we've kind of cracked the property nut. We can now look at other asset classes, or we could expand internationally what we're doing in the US. What's your strategy really? Is it to continue in property tech, or is it to move into other assets?
So from a property tech standpoint, we are we view ourselves as global right now. We're talking to 3 of the top 10 property owners globally who own assets all around the world, and this is why we partnered up with Cushman & Wakefield, who can do the valuation in most first world markets. Do you know what I mean? And so we are working on those right now. We are also working on, again, data-rich, low-frequency trading assets, so private equity, with a number of the custodians who want to provide the benefit of monthly pricing to the people who custody their private equity assets with them. And so valuation as a service. And what we do is we serve up that data so that they can add this additional service. And what that means is if they can move an asset from level 3 to 2, they unlock value on balance sheet, they can do more lending, they get greater visibility into the underlying collateral. So we are in property tech, we are in private equity, and we are moving into low frequency trading bonds where really it matters what the underlying collateral is worth. And we're actually doing that 3rd one in partnership with a Swiss company. So I mean, we're moving on this, and we have a goal in 2021 of being fully in Europe, where we're pricing multiple assets in multiple jurisdictions throughout Europe as well as North America, and we have 2022 as a target for Asia.
Well, Pat, I hope the tourists or the travel routes open up soon and we can get you to London. And I know the capital markets of London are of significant interest to you. Absolutely. And all I can say is, listen, I really appreciate you joining us. And it's a great story. And it's great to see, you know, Wall Street veterans coming up with yet another killer solution. So well done to you and your team.
Hey, it's been a pleasure, and I'm flattered to have been invited to speak with all of you, and I'm looking forward to being with you in person sooner than later.
Pat, thanks very much indeed.
Bye-bye.